got everything going. Good morning. Welcome to our Tuesday morning trading session. Rather historic November the 8th, U.S. election day, of course. We'll see what the markets give us here this morning. Yesterday, I have to admit, was had a little bit better follow through than I anticipated. I thought it was going to be a much quieter, much more sideways type of day. As it turns out, the NASDAQ anyhow put in a very solid rally. We took a little chunk out of this. You did get a chance here again in the afternoon to come back and buy the market off this nice little hard edge bounce and trade that into the close, and then the market just kind of went quiet. So we've got a substantial gap here now, and the market may or may not try to get into that gap. Oops, sorry, gap's on the other side. The market left off up here around the 47, 75, 76 area and opened down here around the 40, 47, 67-ish line. Okay, a possible rule of three here, looking at the eagle. This is a little bit more drawn out rule of three. Rule of three is the counter trend signal, of course. So we've got the uptrend, and now we're starting to break the hard edge, and we're printing counter trend signals. So here's one, here's two, here's three. We have had a test of the extreme. So technically, we do have everything we need for a rule of three signal. And you could even look at taking a second push on this signal. Unfortunately, I'm not able to cover it above this overnight or yesterday's high, which is unfortunate. And this is very much a higher risk trade here this morning, because it really is unclear whether or not the market's going to have much follow through. But we can take advantage of the second push on the signal, so that's always nice. Here on the Hawk Scalper, we produced a first micro-macro cross about a half an hour before this morning's open. The market opened right around here somewhere. And it looks as though we may be producing a 4-arrow consolidation, also looking a little bit more on the bearish side. What time is it? Oh, we're only 3 minutes into the session. Yeah, this is really ambitious on my part. For you Raptor traders, a very itty-bitty cloud crossover. The clouds just crossed. This was a really quick retreat into the cloud and the market coming out. Another signal you're probably better off taking here below the low of the current bar, not necessarily on the hash mark. All right, but I'll dip my toe in the water on the eagle trade. Looks like they're going to attempt to bring us in here in a second. All right, so what time is that? 6:35. We got filled. Wow, we're getting some solid follow through on this. I wonder if I should try to run this one out a little bit. market does have a habit of reversing after hitting our profit objective, however, our high probability profit target. Well, whatever momentum we apparently had on the breakout seems to have evaporated. It's to be expected, though. You can see we've got support here around the lows here at 47.57. It made the market bounce twice before. Tony says he was convinced himself to just sit on his hands today, but got into the hawk and put in a whopping $45 in the bank. I feel like Stagger Lee. I'm still so impressed with myself. I'm still laughing. Yeah, that would be off this scalp here, I bet. Out of the open. The markets are going to be difficult today. Very difficult. I think today is a day where you're going to need to be as patient with your stops as you can. Could take a while for the market to sort itself out, and it's very likely to be non-committal today as well, given the election is pending. this is going to be a very interesting day as well. Post-election. See how the markets respond to everyone's decisions. Stephen, you're dating yourself here. Stephen says, have patience, young grasshopper. I'm pretty sure most of us in the room will know that reference, but you say that to some younger folks and you kind of get an odd look from them. All right, here on the Hawk now, we're getting a green bar sell signal, so the market's still looking bearish with that green bar sell. I'm going to shoot a trend line here. Yeah, looks like we should get some follow through off that green bar sell, at least a retest here of the low before we see a reversal. It's very likely we will see a retest to the extreme. Come on. Tony is asking about the 4-arrow consolidation. He says, Eric, when you have a moment on the Hawk and the NQ, there were about 10 arrows in a row. So when you're looking for a 4-arrow consolidation, how far back should you count? Well, the 4-arrow consolidation pattern, remember the ideal. It's always best if you can recognize the ideal and then you can deviate from that. So the 4-arrow consolidation, the best patterns will have this bear flag or bull flag shape to them. In this case, a bear flag. So when it looks like the market is beginning to consolidate and make a bear flag, or in an uptrending market, a bull flag, which would look like this, then it's the best time to consider, oh, maybe I've got a 4-arrow consolidation going on. In which case you can start counting 1, 2, 3, and then the 4th arrow should rally. Here, because it's in a downtrend and it appears as though we're getting a bear flag, you could start counting 1, 2. All right, I see maybe what you're getting at here. We're getting a little cluster of arrows here. You're getting 1, 2, 3, 4 arrows all in a row. Excuse me, you could. Here, let's do this. We'll pretend it's real time. 1, 2, 3, 4 signals. Is this a 4-arrow consolidation? Yes, it is. However, given that they've all kind of bunched up like this, I wouldn't necessarily take it right on the hash mark, especially given that this low is right next to it. But even if you did take it on the hash mark, again, it's a situation you don't want to crowd the trade. If you're at a loss, consider going 2 swings back. And I don't mean, don't micromanage. Don't say, okay, there's swing 1, there's swing 2. I'm going to put my stop right there. that's still fairly tight. Look for the obvious. So there's swing 1. You could count that as swing 2. That's got at least 3-4 bars going into it. Or if you can afford it, go a little bit higher. Alternatively, you could use the crest in the macro line. But the idea here is that even if this 4-arrow consolidation is not finished yet, you keep yourself out of harm's way. So as it turns out, the market had to retreat a little bit higher before it finally headed lower. Now, in hindsight, we can see that even though it did print 4 arrows right here, these arrows here are all essentially the same signal, aren't they? So we got one, oops. These are all essentially one signal. So we've got the first arrow here, that's signal 2. And then there's signal 3 here, signal 4. This one's a little bit tricky, to be sure, and I can see why you're asking the question. But like I said, if they mirror the high probability signal, namely the bull flag or bear flag, you should be all right. See, here was one that went a little bit sideways, which is not ideal, but it is still, oops, a 4-arrow consolidation. Whenever you start printing signal after signal after signal with no follow-through, like if you were, well, some people might start counting this as a 4-arrow consolidation. This whole mess right here. Once you get to about arrow number 5, it's no longer a 4-arrow consolidation. I might give it that 5th arrow. Sometimes, you know, as you saw right here, sometimes you get an extra arrow sneaking in somewhere. You get the signal, you get the market triggering the signal, you get no follow-through. So it can happen. But this isn't the best example, but we have seen instances, especially when the market's getting ready to turn, or if it's in a sideways trading range, you just get signal after signal after signal after signal with no follow-through. The 4-arrow consolidation is a continuation pattern, and it should carry some follow-through with it. If you don't get some follow-through after the 4th signal, or certainly after the 5th signal, which you could consider your post-consolidation pattern, it might be worth thinking maybe it's not a 4-arrow consolidation. Maybe the market's just stuck sideways. But yeah, don't look too far back, Tony. It should look like a bull flag or bear flag, or at the bare minimum a sideways channel. Well, thank you for asking the question, Tony. I'm really wondering whether I should try to run this bad boy out. What do you guys think? I could leave the break even in. There's that big gap from yesterday still. All right, here we go. I'll leave the break-even trigger on. And as we get to this 47.50 area, I may need to get more aggressive with my stops. Okay, now we've got the primary support. We've just intersected that. Getting a little bit of a reaction to that now. Ah, darn it. Bouncing yet again near this whole 47.57 area, just when you thought we were going to see some follow through there. Steven's off to do his civic duty. Good for you, man. See you tomorrow. I haven't checked any of the news sources this morning. I imagine, given all the interest in this U.S. election, there should be a pretty decent turnout at the polls, which is always nice. After all, it is. That's the whole premise of a democracy, is that everybody gets their say-so. Tony says, why is it that nobody listens to me? I've got that same problem, Tony. A friend of mine likes to say, I should be king. Not me, but him. Oh, come on. If we could just see a little bit of follow through here. My goodness. At least get me to the break-even trigger. We're probably setting about $50, $60. Oh, no, a little better. Up to $100 there. Come on. There we go. There we go. All right, so we're just about to tag the break even. All right, so we've enabled the break even trigger. No. Get down there. Oh my gosh. I thought the sellers were going to pull it off. Interesting question from Rod. Rod asks, is there a market that acts as a leading indicator for the NASDAQ, or is the NASDAQ a leading indicator for another market? The NASDAQ is not normally led by another market unless you watch Apple stocks. Let me see if I can get Apple on this data feed. New chart. And see, we'll just build a regular 5-minute Apple chart. You can do it in DTS as well. It's just going to take me a little longer to set up. Darn it. I used to get Apple on my data feed, but I don't get it on this one. I'm not sure if it actually leads the NQ, but I do know that Apple and the NQ are joined at the hip. In fact, there was a while there that the nickname for the NASDAQ was Apple DAX, because it would just follow the Apple stocks around like a puppy dog. Does the NQ lead another market? Now that's a very interesting question as well, because the late Marsh Jones traded the E-mini based on what he saw in the NASDAQ and the YM. So just a moment here while I build you a E-mini chart. And again, I'm just going to use a 5-minute chart because it's fast. You can do this with a DTS chart as well. So what Marsh Jones noticed, and he actually never watched the charts, he just watched the time and sales. And if he saw a flurry of buying or selling hit the NASDAQ and the Dow, he knew that he had a couple of seconds to get an order in on the E-mini, because the E-mini always seemed to lag by a second or two, or three. He came up with this premise after reading several articles about the E-mini S&P, and the funny thing is, one article said the NASDAQ leads the S&P, and then a few months or years later he comes across another article that says the Dow leads the S&P. Well, he combined the two. He figured, well, if the NASDAQ's supposed to lead and the Dow's supposed to lead, why don't I watch the NASDAQ and the Dow? Now, it's not... the E-mini S&P is not going to wander away from the NASDAQ or the Dow. That's a given. Because the stock market, they're all correlated, right? They're all looking at the same thing more or less. But I haven't followed it all that closely, but I do know that Marsh did, and his profit objectives were always modest. You know, if he took 8 ticks out of the E-mini, that's $200. That would be a huge trade for him. So most of his profit targets were what we would consider to be scalp targets. You know, he'd get in and out, he'd make $50, maybe 100, and that would be that. But, you know, there you go. There's the theory of it anyways. Whether the NQ is actually leading the E-mini right now or whether the E-mini is going ahead of the NQ is difficult to say. No, don't tag me, you stinkers. But yeah, there's an idea there that the E-mini will lead, or pardon me, that the NASDAQ will lead the E-mini S&P. I used to watch the 30-year bond in relation to the E-mini and the NASDAQ, and the Dow for that matter. And the idea was that the bonds have an inverse relationship with the stock market. So in other words, if the bonds are going up, the stock market should be going down. You can see right now, we don't exactly have that same relationship going on. The bonds started rallying around 530. Well, I guess maybe there is a little bit, because that's about when the NASDAQ started to tail off a little bit. They say the bond traders are the smartest traders in the world. They're the toughest to fool. And I guess at $31.25 a tick, you don't want to be wrong too often. Rod says, I tell my friends you are an Ericopedia. No, I've been around for a while. Interesting. Tony says, in regards to that question, I built a line chart with the NQ, E-mini, and YM all overlaid so I could see the leader and lagger. After watching it for a while, I discovered that for me, it was just smoke and mirrors, never helped my trading. You know, at the end of the day, folks, trading is all about price and what's going on the charts here. The mistake that most of us make is that we look at our charts like this. We look at these last few bars and we ignore everything on the left side. If you want to become a better trader, pay a little bit more attention to all this here on the left side of your chart. Now, you don't need to go, back 2 or 3 days or anything of that nature, but don't just focus on what's going on right here. Yes, this is the only part that's moving, but you have to keep your perspective. You have to look back here and be able to judge, is this market moving sideways? Well, yes, I think that's a given. Has it made a test of the extreme, and does it look like it's failing? Yes, I believe that is happening also. Therefore, I'm going to be a little bit more bearish on this market. Does that mean I will not take a losing trade? No, of course not. But the way this market is teeing up, it does look as though we're going sideways to down. Now, obviously, if the market is stuck sideways, we're going to be in a little bit of a problem area shorting the bottom end, as the market may rally back into the range and test the top end of the trading range. But there's always something indecisive in trading. There's no way around it. So they're struggling for direction right now, and again, that's not too terribly unusual given that it is an election day in the U.S. today. the winds of the market changed quickly. Just because at the moment things seem bearish, we have a rule of three, the band is turning over. If this all of a sudden starts to, let's say we get one of these. Okay, so the market comes into the band, comes out, produces a sell signal, comes down, and then reverses on itself. While our initial stop may be up here somewhere, as the market starts to threaten that perhaps this is a test of the extreme to the downside and the market is now possibly going to trade higher, especially if it trades through this swing high, then you have some decisions to make. You need to realize that, oh, I might have misjudged this. I might be on the wrong side of this trade. Maybe I'll bring my stops in just above here. Now, don't crowd them, right to the tick, because the markets are famous for making a 1 or 2 tick breakout only to reverse and, go much lower without you. Ask me how I know. So if you bring your stops in, don't crowd them. Or wait for the reaction. There should be one more reaction. After all, the market is seemingly in a downtrend. The bears are just as anxious to sell as the bulls are to buy. But if you get what appears to be more bullishness coming into the market, realize that you may be wrong, especially if your other tools are also starting to look more bullish. We've got a green bar sell. Let's say that fails, and all of a sudden we're printing a first micro-macro cross. We get a trend change on the Falcon. We get a trend change on the Raptor. Years ago, when the internet was in its infancy, and trading forums were all the rage. There was a trader who referred to himself as the Phantom of the Pits. I think his real name did come out eventually, but I guess he thought Phantom sounded more exotic. At any rate, he had a rule, one of his trading rules, or his first trading rule, was that always assume that you're wrong. I'm paraphrasing, but that was the rule. So when you take a trade, you assume you are wrong about the trade. Kind of different from how most of us do it, isn't it? Most of us take a trade and we assume we're right about the trade. Here's a green bar sell signal. So we say, oh, okay, there's swing 1, there's swing 2. I'm going to take this trade, and I expect to be right. But he went in with the attitude that I expect to be wrong. He fully expects the market to retreat and trade higher. So what did that do for him? It made him more conscientious of the fact that when the market was reversing against him, that he was wrong. Kind of a little reverse psychology there. And what that enabled him to do was to cover his stops a little bit quicker. Now, he was a pit trader, so they do things a little bit differently than you and I do. They're trading for much smaller targets. His second rule, by the way, in case you're interested, was, and again I'm paraphrasing, was always add to a winning position. But they would add, again, being in the pits, they would add differently. He would add when he saw more orders come in, or whatever his criteria was. But he may be adding every 15 seconds to a trade. You and I we wait for our bar to complete, which could be 30 seconds, it could be 30 minutes. I love Tony's insight here. Tony says, back in the day, I went to the Merc to watch. The pits were full back then. Yeah, now almost everything is electronic. Um, Tony says, I got my visitor's badge and went to watch the big boys trade. So many of the traders just stood there and pushed the stops on both sides, back and forth, back and forth. Even in an active trade, guys were just sitting there running the stops. It was fascinating. Yeah, don't think for a moment that nobody knows where the stops are. Everybody knows the weak traders are looking to buy just above this high. Everybody knows the weak traders who buy just above that high are going to put their stops just below that low. That's why I encourage you to keep your stops a little bit further back. When they're running stops, very often they will try to, and again, this is why keeping your stops 2 swings back is helpful as well, because they'll be able to run the first swing, but they won't always be able to run the second swing. So let's see here. Let's say we took, okay, here's the first micro macro cross. High probability signal, we took that. Actually, let's go with a less than ideal signal. All right, here, you know what? We'll do this green bar sell. So there's swing 1, there's swing 2. We're not taking this trade. There's not much going on at the moment, but let's just see whether or not they've broken down now through the lows. So they've engaged the weak sellers. So they're going to try to run the weak sellers stops, which will be just above these highs. Everybody knows it. Oh, maybe not. Darn DTS being accurate again. Trying to make a point here. So the scalpers are getting out now. Buyers are loading up. And we're going to get a tug of war. Maybe. Tony says, are they hitting the stops left over from 6:50 my time? I don't know if they're hitting the stops so much as is there some buying going on? Because remember, we've got a green bar sell here. We anticipate a test of the extreme, and the market may or not be able to resume the trend from here. Well, if you did take this trade and the market did break down, of course you had the opportunity to roll your stops in. So they're not going to allow me to make an example of that, or at least not the example I intended to show you. I thought perhaps we were near yesterday's lows, but not quite. We're just still near the afternoon lows. And obviously the buyers looking to buy back in at that point, trying to rally the market up again. All right, so here we go now on the Raptor. We're about to produce perhaps a soft edge buy signal. We have had the test of the extreme. All right, where's my signal? Come on, Raptor. We're producing a trend change signal here on the Falcon. There's the Raptor signal. All right, so the Raptor and the Falcon both producing a signal here now near the high. I suppose it may have been advisable to take it above this little swing high. come on. Really? You're not even going to get up here to test the top end of today's range? Ideally, we would even get up here into the 47.70, 75 area, fill that overnight gap. That would be something. Yeah, they're struggling. Um, Good question, Peter. Peter says, if you know there's going to be a meaningful move in the market after hours like tonight, would you be trading? Sure. Yeah, if you think the market's going to make a big overnight move, definitely. I guess we'll know in a few hours here um, whether the pundits are going to start calling things. When do the polls close? What time? Does anybody know offhand? I see. Ken says about 8 o'clock Eastern. Yeah, so they'll have some of the totals in. If it's already leaning one way or the other, yeah, that could definitely spur the market. Right. Tony says we should know after the Florida results if it's over for Trump and therefore the election. Yeah, so it could. It definitely could. The last election was not, didn't affect the markets as much. In fact, I don't think I've ever seen an election weigh so heavily on the markets as this one has. Dan's got a good question. Dan says, yesterday we had a storm in Dallas and lost power for a little while. What would happen to a live trade in that situation? Well, your order is still at the brokerage. And this is an excellent question he asked because you should always have a contingency plan for power failures, for computer failures. for anything that would affect your trading. Now, your stop, my stop right here would be live at the brokerage. So if I shut my computer off right now, my stop would stay at 47.55. Therefore, hopefully this would be my max loss. You should have a cell phone with your broker's number programmed into it. If you lose power, at least you can touch base with your broker and you can ask him, you know, I'm in such and such a trade, and ideally you'll have your ticket number even. But if not, he can look it up via your account, or she can look it up via your account. And you can ask him where the market is right now, and if you're in a profitable position, I would well, profitable or non-profitable, I would suggest you close your trade, even if it's for a loss. You know, even if you got to suck up, say, a $260 loss, that's advisable to losing control of your trade. Excuse me, you wouldn't in this case. If you called your broker and said, I've lost power at my house, my computer is down, I'm long the NASDAQ at 47.61 half, can you tell me how my position is? And he says, you're $20 to the good. I say, close it. Flatten my trades. Even if he said you're $50 in the red, close it. I need you to flatten all my trades. We always make mistakes, it seems, over the little things. Those are the ones that end up costing us the most. You know, we all probably know somebody who is not thinking clearly and may have had a couple beverages too many and decided to drive instead because a taxi was too expensive. And, you know, you end up getting caught, and rather than having to fork out $50 or $100 for a cab ride, all of a sudden you're faced with thousands of dollars of fines and legal fees, and never mind the whole nightmare. Or if it were even worse, if you actually hurt somebody because of your stupidity. But I digress. Trading in that fashion is similar. Don't trip over the dollars picking up pennies. Right? So you take a little loss, big deal. But you should always, always, always have a contingency plan. Always, at the very least, have a cell phone. A laptop computer is helpful as well because, well, unless your internet goes down, which it probably would with a power failure. But even from your cell phone, sometimes you can get go direct to the satellite with your internet connection. I don't think Ninja makes a mobile version yet. The software is too heavy. Come on, get up there. You know you want to. All right. Dan asks, is the eagle setting up for a trend change? You might be looking at this and thinking, is this a rule of three now to the upside? Well, it's not a trend change per se because our band is still bearish. And remember, your rule of three signal is a counter trend signal. So what that means is you have to have a trend beforehand. So if you take this trend into consideration, and then we come down and we start printing counter trend signals. So we have a bullish band, but we start printing signals against the band. There's signal 1, there's signal 2, there's signal 3. This is a rule of three signal. Now, a rule of three signal requires that you first have a trend, and you must have a test of the extreme. Without that test of the extreme, without a trend, you do not have a rule of three signal. So here, what you're looking at right now, and I can see your logic, you're thinking, well, this morning's trend has been down, and you're correct. This would be the first signal that we've printed against that trend. So it's too early to call for a reversal. You can see this as a downtrend. At the very least, we need to see a test of the extreme and one more counter trend signal print. Then I might consider it to be a rule of three, but it has to print that test of the extreme. Oh, interesting. Peter asks, hi Eric, have the IW guys considered enabling the Day Ranger to work in Market Analyzer? No, not that I'm aware of, but that's a very interesting idea. You know, when you guys come up with these clever ideas, what you should do is you should shoot an email to Adam, because he's the fellow who can make these sorts of things happen. And trust me when I say it means much more coming from you than it does coming from me. I toss ideas at Adam all the time, but it carries a lot more weight coming from you guys. All right, well, we're plodding along here. Crude oil all over the map today. We haven't really looked at crude oil, but they're trading punches as well. A little bit of a move down, a little bit of a move up. In regards to the earlier question about markets that lead. Crude oil used to be a good confirming market for what was going on in the stock market. They did tend to move together. Jim's still in Italy, but if he were here, he would tell you the NASDAQ, or pardon me, the DAX leads. And that's interesting. I'll build a DAX chart here while we're waiting for the trade to do something. And again, I'll just use a time chart for simplicity's sake. So here's a 5-minute DAX. I'm not sure if it's actually printing anything differently than the NQ right now. Saw a little bit of a rally here. The NASDAQ also rallied. But I do know that Jim follows the DAX for a hint as to what might be happening in the Dow. He follows the mini Dow very closely. Well, we got a little bit of a trend going on here. Okay, back now to the highs of the morning. 47.67.5 is the obstacle. If we break through there, where's the next stop? So the median line, 47.68, same neighborhood. Next stop, 47.79 or 47.80-ish. Leash is asking, the first signal on the hawk, was that a good signal in itself, not looking at the eagle? Yes, absolutely it is. This is your first micro-macro crossover signal. It's perhaps the highest probability signal you will find on your hawk microscalper. There's a lot of things that I like about this particular signal, besides the fact that it is a high probability signal. This trade has got very good market structure. And what I mean by that is we have retested the lows right here. Right? So we have a market that's in a downtrend. It's come up, retested the lows. Unable to resume the downtrend, we come back and we produce a first micro-macro crossover signal. Now the first micro-macro cross occurs when the micro lines and macro lines cross and everything is in sync. So we've got green bars, green trend lines, green filter. This is where the whole signal, everything is lined up. This is a very high probability trade. If I wasn't already in the Raptor trade, I would definitely have taken that signal. One other interesting note is that you're going to notice, look at all these green bar sell signals that we've gotten. We've got a green bar sell up here. We've got another green bar sell up here, and yet another green bar sell here. Why is that significant? Well, for the NASDAQ, we don't usually see that many green bar sells. A green bar sell tends to be a weak signal in that it produces because the market has moved so far against the trend. Right? The trend is bearish. We see the buyers pushing, 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 and they can even push the market into green bars, and then all of a sudden we produce a red signal. It's almost as though the sellers finally woke up and said, all right, well, we'd better do something about this, or else we're going to lose control of the market. Now, these green bar sells were a little bit stronger because they did fall on the trend line or close to the trend line. If you shoot a trend line there, you can see that one had good support off the trend line. This one quite shallow from the trend line. But normally you don't see more than 2 green bar sells within a trend. So the fact that you got 3 here should make you a little bit leery as well and think, I'm not sure we're going to see the market resume trend after this. That's not to say you're not going to make your scalp target if you chose to scalp it. So you're in there, out there. You can see you hit your scalp target. There's no way I would go in for the full amount knowing that this is the 3rd green bar sell signal. I might take the signal, but I would go in light. 1, maybe 2 contracts at the most. Dial down the risk to 1%. Everybody can afford 1% of their trading capital. And if you hit your profit target, great. If not, well, you've lost 1% of your capital. It's not going to wipe you out. But yes, Cindy, that's a very good observation. Excellent call. All right, I'm trying to run this one out a little bit. Maybe get a cloud crossover. I have a feeling I should have probably taken all my profit when I had it, but we'll see whether we can get more follow through here or not. Well, we'll see now whether the crude oil market actually does have a relationship with an NQ, because we just had the exact same signal, more or less, on the hawk right here. Not the green bar sells so much, but we've got a market that's in a downtrend. This case, we've made a tiny test of the extreme, and we come back with the first micro-macro cross signal. The first micro-macro cross signal is always worth trying. Always. 80 times out of 100 minimum, it will reach its profit objective. Now this one just made a very strong rally higher. Yeah, this is in crude oil. The downside with trading crude oil is you can't, I could keep a proper stop there. I was going to say the downside in trading crude oil is that you can't always get the stops where you need them to be. So that would be swing 1 right there. This would be swing 2. This would be a fairly safe stop for this trade. Way to go, Tony. Very important lesson, and this is a lesson that I can preach to you all day long, but until you do it for yourselves, it never really seems to hit home. Tony writes, lesson learned, all caps. I was not going to trade today because of the market's lack of energy. Result, I did trade, but only really juicy trades. Scalps, get back to cash quickly, reduce my trades to 1%. Result, 4 trades, all profitable, all multi-contract, and have $80 over my daily goal. The moral of the story, shop for the juicy trades. Absolutely correct. All right, we got the sellers leaning on the buyers here a little bit. We just took a poke through the 47.67 area. Crude oil still on a tear. Be interesting to find out what they attribute that to. It does look like the NASDAQ is going to try to play catch up. Excuse me. They keep pressing. We're back here around the 47.70 area, which is our median line on the support and resistance suite. So what I'm thinking now is here on the Raptor, for you Raptor traders, producing a cloud crossover. The market may well drift back into this cloud and then come out with a buy signal. So I'm trying really, really hard to be patient with my stops. Of course, it's a trade-off. You've got an extra $120 more or less sitting there waiting for you to pick it up. Cloud crossover. This one is practically textbook. So the market comes down. The cloud changes direction. The market retreats into the cloud, and then the cloud should support the market, should support that new direction, comes out, produces a sell signal, in this case, a sell signal, and you can see we had nice follow through from there. Now we're looking for the opposite to happen. The cloud is crossed over to the bullish side. The market should drift into the cloud, and the cloud should reject it and push it out, or support it, I suppose is better. Support it and push it out. So that's why I'm trying to keep my stop a little bit deeper. Of course, if we drift up here to the next resistance area, which was somewhere around 47, where was it? 47.70, 47.80, I'll take the profit. If we get up there without falling back, I'll take the profit. And we're getting near the close of today's session. I've got an appointment I need to go to, so we're going to close the room on time here this morning. If anybody has any questions or comments, please feel free. A reminder that tomorrow, yes, Alice says, well, we'll have a new president by tomorrow. Yes, you certainly will. Get out there, do your civic duty. And a reminder that tomorrow's venue will be at the open house, the public trading room. So I'll see you guys then. All right. Have yourselves a great day. We'll talk to you soon. Bye.